Okay, welcome everybody to this evening's ACY Securities webinar, live forex market review. My name is Duncan Cooper. Before we move along, if you can read through the disclaimer, if you're on our YouTube live stream, I can't see the chat. You can obviously watch on there or just follow the link that I've given and join us in the webinar so you can ask questions. All right, so everyone, please read through the disclaimer. Any questions to the chat box or the question box. All right, let's move along. If you don't know me, then I am Duncan Cooper, Senior Market Strategist and Trading Mentor at ACY Securities, and I'm a full-time trader. I've been trading the forex market now for more than 15 years and mentoring for more than 10 in that market. If you want to contact me, my email is on screen, duncan.cooper@acy.com. If you want to follow me through the week at our website, you can get my analysis at our acy.com website, market news tab, on our YouTube channel, ACY Securities Australia, and you can connect me as well on Twitter and LinkedIn. Most of my content also goes through those handles. And of course, we have our Telegram channel. If you don't have access, just contact Nathan.bray. He will hook you up. As well, if you'd like to get access to our chart layouts and templates that I've used in the webinars, he will organize that for you. Just send him an email, put his details in the chat momentarily. As well, on Monday, we have our Inner Circle webinar for clients. So if you are a client of ACY, just contact Nathan. It will be on Monday the 13th, 8 p.m. Sydney time, where you can talk to me and Nathan. Anything to do with your trading or anything to do with trading, you can just ask us. We have a conversation. We can go through charts, anything you like. So just contact Nathan. I'll put his details in the chat. All right, that should be in the chat. So just give them a contact if you've got any questions. All right, let's get into, first of all, we'll have a look at what news is coming up. Just click over here. All right, so we have had Fed Chair Powell testifying over the last couple of trading days in the early mornings. And what's come from that is pretty much that he said that interest rates are probably going to be a lot higher than people have been expecting and what the Fed's been expecting. And I think some of the takeaways are that they may be raising interest rates, maybe more towards 50 basis points and much more to a higher level than anticipated because they still have inflation. All right, so, and we're obviously seeing pairs to the US dollar move down very strongly. Now, coming up, not much on the front tonight, but tomorrow there are two risk events. So it's hard to avoid or know when it's going to come out anyway. To avoid it, just don't be in a yen pair, but it's usually in the afternoon in Australia. We have the Japanese monetary policy statement press conference. And then we have pound GDP figures coming out at 11:30. Then we have Canada and US job figures. So the bigger one is the job figures there, but definitely a risk event for the yen. Especially, I think we've got a new governor and you never know what he may say, different to what's been said before. So, of course, that's going to be a risky event. So bear that very much in mind. And it is worth noting as well as we move through the weekend that we do have a daylight time saving shift in the US. I hadn't noticed that before, but so that means that when the market will now open on Monday at, if you're in Queensland, for me at the moment, the market opens at 8, so it's going to open at 7. If you're in New South Wales, it's going to open at 8 until your clocks change, and it'll be 7. All right, so it's worth noting that we have a change there in trading hours. All right, let's get to the charts now. Hasn't been the easiest couple of trading days after we've had this drop of trying to work out where price may bottom, where it might rally to. That's just the way trading can be when you're moving from one news event and then we'll have another news event on Friday. Sometimes things aren't easy to just say, okay, I think price is going to rally to this point and then move down, or break a level and move through. Sometimes the market is overstretched. Nobody wants to commit one way or the other, as we're waiting for the news items to come out, right? So it's worth bearing in mind that sometimes trading isn't just the simple fact of trying to do some analysis and coming up with a setup. All right, so let's first up have a look at the dollar index. And this week we have most definitely come up and traded above the weekly high here. So if I move to my weekly chart, you know, from a pure trend perspective, we've traded above these high points. So we're changing the weekly trend to up here. And of course, on the monthly perspective, we've moved above these two tops once more. So things are looking positive with the overall rhetoric and conversation from the Fed this week. I would anticipate we're going to have much higher prices on the dollar index. Whether or not we can take out the high of the year from last year, but we certainly put in a significant low here, and we are starting to change the weekly trend. So, you know, we may pull back from that weekly top at the moment, but the most significant level to watch is that 103.82 level, the monthly highs that we moved above. As long as we're holding above there on any pullback and then we turn around, there's still every chance we're going to move higher. But it would be nice to see a very positive closing candle on the daily chart here above 105.69. So a bit of a spinning top yesterday. So we may well have a little bit of a pullback and then we'll see what happens. All right. So overall for the week, very positive for the dollar index. S&P 500 is putting in potentially, we move this to a weekly chart. This it could be a lower top forming. We're very negative for the week there, just failing just short of the 62% retracement and very much holding below this area of resistance here, which is a monthly low that we've been holding below. That monthly area there, you can see that we've tested, tried to move above, and then on the rally here, we couldn't get quite to it. So that's maybe a lower top forming on the weekly chart for further decline. So we're seeing a scenario where we've got US dollar strength, potentially stock market weakness. We'll get to gold a little bit later, but gold most definitely sold off very heavily as well on the back of what the Fed was saying. All right, so might move first of all to the pound pairs. And, you know, yesterday I put out the idea that we could come up to the 1900 level. So what has been happening on the weekly chart, look here, double top at the 62% retracement of last year's trading range. We have traded below the midpoint of the double top. So I'm anticipating we could move down to the 200 level down here at 112.35. At the moment, though, because we got a little bit overextended, where I said yesterday, we may get a bit of a false break here, and broken support up here could be resistance on the retest and then, you know, trade down. We had a bit of a range forming here. We've broken below that area. Does the area of the range, the base of the range, become resistance now? So we have been popping up today. You can see here on the 4-hour chart, whether or not we can get up to, you know, I would be watching day support here that was 119.15. Let's move to a 50-minute chart here. So there's 119.15, which is that day support low we've moved through. Now, when we dropped through on Fed Power Talking, it became resistance here on the 15-minute chart, just there. So whether or not we can get back up there, but last month's low is that level at 119.15. We have spiked up. Now we may put in a higher bottom here to continue up for the day, but I will be watching 119, as I put out yesterday, 119 to 119.15. We might not get there today, but we may spike up there tomorrow when we have the job figures, and we also have the UK figures coming out tomorrow evening. So that is where I would anticipate resistance to be for a lower top to form in the day chart, if, you know, we can get up the range. So obviously here today, we've been getting some form of support now on the 118.41 level. All right, now We may not get up there. The hard thing is at the moment, this is weekly support that we false broke, and you don't want to trade into support. So over the coming week, the coming week of trading, we could come up to this area and hold now. Last month's low becomes resistance for a continued move down. All right, potentially. Or the other scenario would be that we'll have to wait and see what the job figures brings. Maybe that's going to be US dollar positive, and we get, maybe we don't get up to the high area of resistance up here, and then we drop. So then over the next week, I'm always planning out what can happen for a week's time. We could drop, and then you want to be watching 118.41 to be a resistance level to trade down from. All right. I'd much prefer the moving up to 1951, looking at that area to sell if you're looking for a short, rather than waiting for a hypothetical drop rally that may not come, or may come, but it's worth just planning out what could happen over the next week. The closest thing that could happen is if we come up to this area over the next 24 hours, 1915, 1900, and then watch that level for failure and what you set up to get short. Okay. So, and this is not to say I'm great and nobody else is good, because if you're not short, then you may be looking for a short. But when we had this pattern forming up here, and then I'm just trying to get you to think how I think through many years of trading, is I was looking at this as a double top, and I got short just a little bit below the 123 level, and I'm holding. So I don't have the worry at the moment of trying to get in this rather difficult area because I'm already short. So it doesn't matter for me if it moves up another 50 pips and fails, or if it just drops, 100 to 200 pips over the next 24 hours. It doesn't really matter from my perspective because I'm already short. So that's why when you see a significant pattern forming, getting in at the top of the range and having the fortitude to try and hold the trade for the long term is that when things are a little bit difficult to get in, well, maybe you're already in and you don't have to worry about trying to get in. Okay. But if you're looking to get in, I would simply be monitoring up here at the moment, 1915, 1900 level. Can you get a rally up to then sell? Okay. So monitor that. Now, I put out the analysis down the pound yen, which is not coming to fruition at the moment, but it could. So that's why I said at the beginning, it's not easy to put out rock solid analysis that is going to come true when you're having to dodge the news. Okay, I can come up with rock solid levels that I'm certainly watching to trade around, but sometimes price doesn't want to move to the level and goes the opposite way. Now, on Tuesday's webinar, I was discussing this weekly level of support. This is a weekly low here. And I can just tidy this up a bit. Move to the weekly chart. We have a low here and a high here. Now, what's happening at the moment is we were above, at the start of the week, we were above that level. So that was potentially support. And I said, yes, it could be support on Tuesday, but I was maybe more favoring the fact that we might break below it because I was looking at this range and looking at this as a possible 79% failure. So if that is a failure, we would break back below that weekly support level, which we've done. And now we're trading at the next level on top of this top here. Now, you could have a different viewpoint of where you think price is moving here. I think it may have failed up here for a move down to test support down here and maybe follow through in line with the weakness that we're seeing on the pound dollar. As long as the pound dollar is weaker than the dollar to the yen is gaining, then potentially the pound yen is going to move down in line with the pound dollar. So I'm just looking at that as a failure there for a move down the range. Now, you may favor the other way. You may favor this is going to be support here to move up, but we are starting to form here a lower top to the last top. We don't have a lower bottom yet, so it's a little bit mixed, but the first sign of a trend change, a lower top forming there. So at the moment, we are testing support. I would like to see, and price doesn't always give me what I would like to see, but what we have been seeing is there was a consolidation range here, all right? Then we broke, and that was all happening on weekly support. And then we broke below. We almost came up to test the bottom of that base. And then I noticed that we hit support here. So I was anticipating price would then come back up to that base, which it hasn't done yet. Now it's testing this level once more. Now, if you want to trade both sides of the market, you could be looking for an opportunity to trade here, to trade up. I went through how to trade a range last night, and there is most definitely now a range from resistance up here to support here. Now we could most definitely hold here and move back up to resistance. All right. So I am actually just watching to see if we can come back up to there. Now I'm not that fussed about trading that way. I know price has to go that way to get there, but I'm also looking at this as I think the trend is now down. So I like to position my trades always with where I think the trend is, which is down. We're moving down, but we're creating ranges, moving down, creating a range here. Then I'm expecting a move down. So I don't want to be trying to trade up here and then it doesn't want to move up and it just moves down. So I'll be watching up there at 163.03 if we can get there to trade with that day chart trend that I'm starting to see form. So putting a fib across there, 62 level lines up nicely with this broken area of support. So that's my preferred level to trade down from. If you can get up there, kind of see a setup that I'd like to sell on a lower time frame. Now price might not, so I would prefer price now to go this way up there and then look to sell a rally at the top of the range. Get my right tool there, to come up to there, to fail, to move down. Now, what might happen is we simply break down the next level of weekly support and we don't rally. But the problem, trying to get short, to me, getting short is what I'm trying to do. But where can I get short where I'm not trading into a level of support? So I'm not going to sell into support here. So option one is to look for that area. And we have the bodge coming out tomorrow. So what I'm showing you now may just get destroyed from what happens, or we may simply come up to there after the bodge and then move down. But what might happen is we simply now break below there. And then you're looking for that level to be resistance on a rally for the continued move down. All right. So look, two levels I'm watching to be resistance at some point. All right. Now, of course, if you feel like the longer term trend is going to remain and move up long term, well, this area, moving down to a 15-minute chart, this might be the area that you should be looking at because this is weekly support at the moment. This could be the area that you're looking at, to look for a setup to buy here, to trade back up, to maybe break through 163 up here. All right. So at the start of the day, when I was doing my analysis, price was around about here. So I was hoping that price, would come up this way. Of course, it hasn't. So revisiting up there may not come around now. So it may be a question of waiting for support to break. Can that be resistance for a continued move down to the lower levels of support down here at 156.07. This top from over there. And there's also a weekly low there at 155.35. So I'm anticipating we're moving downwards to that area. It's just a matter of seeing a setup to get in, okay? You can come back and look at this 50-minute chart later, see where it starts reversing. Or I'm just going to head over to, looking at my other screen. All right, I'm not seeing anything setting up. So I'm just going to head over to the left. Let's just break things down. Now, I've been discussing the idea that this has been a trend down. This has all been corrective up here, and we're topping out up here. Fib range, 62% area there. And this week, we're starting to want to move below this low over here, which is a monthly low, 90.51. Got some lows to contend with the left here, so it's worth noting that, it's always nice to sell a rally. And I hate it when I'm doing a webinar and we're not in rally mode. We're getting down at the bottom of the moves because, I don't sell at the bottom of a move. So, all right. Now, what we can see here today is that 1, 2, 3, 4, the last 5 candles on the 4-hour chart starting to want to hold below that 90.51 low, support low that was on the monthly chart. So, price may offer you another move back to that level, so 90.51, where you could drop to the 15-minute chart and look for a reversal. It might not offer you that anymore. We got last month's low down here, so we could be actually moving down to 89.86 for a test of that level. So at the moment, I think it's just a waiting game. There's a lower top there. Price is going to potentially move down. And then, of that range, draw a fib to look for then, your 62%, 79% rally to sell the next 4-hour lower top. All right. Time to trade today was when we were testing up there at 90.51, but we can't go back in time. So waiting for the opportunity to see a rally is the thing. And we may well move. We could have a considerable move down over the next day or two when we have job figures coming out. All right. If we ever get a considerable move down, then look for rallies back to the figures. So at the moment, the next figure level to break is 90. So if we considerably move below 90, watch for a rally back up to 90. As well, we've got last month's low here. So we can get a considerable break below last month's low. It could be a rally back up to last month's low, which is at 89.86, only 14 pips lower than the figure. So, down, some form of rally, and then down. Over the next month, 2 months, back to the day chart here, we're probably coming down to test 8,700 down here. So if you haven't already positioned yourself, then just look to sell a rally on the 4-hour chart as and when it comes together. So the price action really for today has been, I can get my crosshairs to come on. All right, that's the high of today, just there. So what you could do, we could rally back up today. That is the high of the day at the moment. So this is the range of trading that we've had today. Drawing a fib across the range of what's happening today, and if this moves down, just drag the fib down. Is I can see the 79% level does overlap with where we've been fading. Through Asia here, this is the Asia high area. We could come back up to the Asia high today and test 90.51. That would be a super level to watch for a reversal if we can get up to that level. But, don't look to sell at the bottom of a move. Right, at the moment, we're at the bottom of Tuesday's low over here. All right, Tuesday. Oh, this could be actually Wednesday's low. But Tuesday or Wednesday's low here, you don't want to be selling into that area. You want to be trying to sell a rally. So you could just monitor today's range and does it come back up very close to 90.51 through the day. Okay. Aussie dollar. Very much getting very negative. That's the last year's range. Fair at 62, creating this kind of double top here. Now, if this is a true double top, and I've been discussing on a number of these pairs of these double tops forming, if it is a really true double top, and I don't like to, put these forecasts out like rock solid, hard and stone that this is definitely going to happen. All right, but let me just get rid of that fib. because sometimes these numbers are rather extreme because we're trading at 66 at the moment. And if I put something out on Twitter or, in a YouTube video as a statement, if this is a true double top here, there, and we meet the double top target, if we continue to move down, so if we break below last year's low, this puts this double top very much in a position for price to move down if it's a true double top to the 200% market down here, and that's at 52. If I come out and say, well, the Aussie's going down to 52, people will probably, balk at me. But this is just technical analysis. And first of all, you have to start to trade the pattern that you're seeing and get into a trade in line with the pattern that you're seeing. And then just price start to unfold nicely. And if it does, then you may want to start to think about, can I hold this position for, yes, can it get down to 52? At the moment, I'm not holding my position thinking it will get down to 52. Price will have to get a lot more severe for me to start to think that we could get down to 52. But it's not out of any stretch of the imagination that we could move that way. All right, so we have this potential double top. We're certainly changing the weekly trend to down now because this swing point low here has been broken. So the weekly trend has turned to down. So really the next major level of support to target would be down here at 61.69. And then what can happen down there? All right, so the day chart trend here, big drop the other day. We have tested yesterday underneath that weekly broken support, and it seemingly we don't want to move above. But with this rather large candle, I would be cautious that we're going to hold below 66.29 at the moment, because there'll be some form of imbalance. Well, there's an imbalance. There's most definitely an imbalance there on the 4-hour chart. We really need to move back up to broken support to fill the whole imbalance. There's the imbalance there. All right, now price doesn't have to fill the imbalance. I can see an imbalance back in time up here that hasn't been filled. And we didn't completely fill that imbalance up there. And there was an imbalance up here that we didn't fill either. So it doesn't have to fill the imbalance, but when I see that imbalance, sometimes when we break through weekly support, we will false break on the first attempt. That's very clear if you go and look at the New Zealand dollar, because that happened last week. We false broke last week, and now we move below this week. All right, so I'd be a little bit cautious selling down at such low levels at the moment. I would be a lot happier, if I was looking for a sell, is for price to come back up to this area, up at 66.94, which was where we couldn't break below last week. Now we've clearly just broken below, we just sliced through it like butter. So I would be looking up there as a very good level. So if the job figures come out tomorrow, a little bit US dollar weak, we could well come up to that level. All right, but the market's always right. So what I would perfectly like to see happen, that level there, we may simply a broken structure. You can see that we tested it yesterday there. 66.29 got broken. And we didn't actually trade at the level. Or did we? Yes, we did. We traded exactly at the level. And today we've been trading up, 50-minute chart here, but we haven't got there yet. So we may come up to that level today. Now you can definitely monitor 66.29 to be resistance for a further failure, because what could happen is we could just simply trade above yesterday's high, and that gives us a day up. So it just relieves some of the oversold pressure in the market. And then we could see a complete failure there. And you might see a tight setup that you can sell there. And then price simply holds at that level and moves down for through the next month. All right. But picking this level or the higher level, I would much prefer the higher level, because it's the level that we broke below. And the overall psychology of the market is with broken support, there'll be people up here that bought that haven't closed their positions. So the psychology would be, well, if we could get back up there, yes, I can close my bought positions out and get short. So that would act as resistance up there. So from a psychological perspective, That would be my preferred level. And we've got this imbalance here that potentially needs to get filled. All right. Is anybody short the Aussie from higher up? No. All right, so two levels to watch, 66.29. My preferred option is the high level up there, 66.94. Up to the 6,700 level would be my preferred option, but may never get there. Euro yen. I'm kind of kicking myself because I thought this was topping up here, but with the bodge coming out tomorrow, I didn't want to get short. And of course, here the day chart trend has turned to a lower top, lower bottom scenario now. We're starting to move below this significant triple top area, monthly resistance over here at 144.26 from last year. I love that range there, falling at the 79% level. So like I was suggesting on the pound yen, where I think it's failing at 79% level, I think this is potentially now failing for a move down, you know, so we've had that high to low move there. I think we're now moving down. And can we break support to the 127 extension? All right. Definitely forming now. There's no question where the day chart trend here is. It's a little bit range bound, but now that we're breaking below today, it's clearly lower top, lower bottom. Okay. And that range, now it is worth noting the range. This is the day swings here. Back to the day chart. We've come up to 79, moving down. So what we have to be aware of at the moment is, I mean, yes, this could just drop down for 2 or 3 days, but we're actually getting into the profit taking portion of the move from the, you know, we rally up and now in the profit taking portion of the fib tool. So, you know, once we hit the 127 extension, we might hit last week's low. Is, you know, if this continues to move down here, you want to then get yourself ready for some form of a rally. Now, whether or not, you know, you can draw your fib from that, now let's say it gets down to there. You can start to plan out that we're going to maybe rally up to the 79% level there. So that would, you know, what I could see there, if that was the kind of scenario that we get, you'd have a left shoulder here, head looking up there. But you know, obviously price would need to be moving back above this broken area of support. All right, so I would certainly be watching for that. We'll just have to wait and see what price wants to do. All right, so it's maybe just getting to the bottom of its decline there from the day chart. So you just need to wait maybe for the next rally to finish. Hopefully when the bodge does its report tomorrow, it doesn't do it, you know, it doesn't do one of these moves here where it drops like 500 pips in, you know, an hour. Because then, of course, price is going to be down here and there'll be no opportunity to trade from these higher levels down. So the perfect scenario, and right now we let this movement just finish. Next week, look for your rally. And then most definitely look for the opportunity to sell, to trade and move down this way long term at the moment. Unless the bodge comes out and it totally destroys that trend that's starting there. So that at the moment, news aside, that looks like what's starting to form. And there's a question of just biding your time now for a rally to occur and look to sell a rally. Euro dollar. All right, so we're seeing a little bit of bullish price action at the moment through the day, getting support here at the central pivot point. Pound, you know, I haven't got the pound up, but I've got it on my other screen. I can see that's heading back upwards. So let's just go to the day chart. This is day support here. This is weekly support. So from a pound dollar perspective, looking at the euro dollar, the euro dollar is a little bit different in that potentially when you look at the weekly chart here, this is a higher bottom to a top. This could be a higher bottom here for me to move upwards once more, especially if it takes out that top there. All right, so at the moment, when we get back to the day chart, it's not wanting to move with any conviction below 105.33 support. Now 106.35 is a significant monthly low from long-term back in time. If I go to the monthly chart, it's this low here. So the question for euro dollar traders is, have we now decided that we want to be below that level long term? All right, so any movement back up at the moment, there's that 106.35 level. 106.55 level is a day support low over here. If we just look at that move, then the 62 level pretty much overlaps with that monthly level of broken support at 106.35. So don't know how high we can get up because of what happened from the Fed's, statement. Fundamentally, there's definitely been a shift this week in what we're seeing from the Fed. They're now saying that we're probably going to raise interest rates higher and at a higher rate. It's like that's a very, in around about a month, we've had a real turnaround. The market was anticipating that maybe the Fed was coming to a terminal rate or close to, and they weren't going to be raising much more than a few, maybe 25 basis point rises. But now we've obviously had a significant change. And my fib's not quite accurate there. All right, so the fib's at 106.29.62. 106.35 is fractionally above the 79% level, 106.55. And sorry, the 79% level is at 106.57, and the daily resistance over here is at 106.55. So that is actually the start of the drop. Now, whether or not we can claim all the drop back, because it's clearly a fundamental shift, and the market may not want to move back to where the fundamental shift started, but that would be a great area to watch if we could get up there. All right, so today at the moment, it is worth noting that yesterday, we did get quite a significant jump back down from the New York high here, the high of the day. So it would be worth watching that level today, 105.74. We may just touch above there and then fail. Might just have a day up, one day up through the course of the week, 105.74. What's going on? What's that number? Says 105.74. All right. That top's supposed to be at 105.74, but it doesn't look quite the same as my line. My line looks fractionally above. So watch that level. We may well just hold here. You may see a tight trend line break back down to the downside if you see a false break there. Or then, you could start to monitor the higher levels of resistance if we do start to claim back. Now, discussing the 106.29 fib there and the 106.35 monthly level of resistance. If you look left, from a 15-minute chart perspective, the drop starts. There's an imbalance here at the moment that hasn't been filled. So, logically, we could fill that imbalance there, and that all lines up with this area here. Now, that could get filled tomorrow when the news comes out. Potentially could get filled today. All right, just looking at higher levels at the moment where price could get to, where you could start positioning yourself with that fundamental shift. And Slav, you're telling me it may move well above 105.70 for anticipation of Friday night's news. Yep. It could, or it couldn't. I've got no, I know often when we get a very significant fundamental shift, so what we've had at the moment, it's not the question that we've had a data release telling us that there's a fundamental shift. It's the Fed telling us that there's a fundamental shift in their thought process moving forward. So what can happen is that we go a little bit sideways for a few days, very sideways here on the 15-minute chart yesterday. And we could just be, we could, so pretty much the range yesterday was, let me just, for the majority of the day, we were down here for the low, but the majority of the day, the range was much more in this kind of price action. All right. So we may well just stay in that same range. We may just only just come up to here and then move back down. There's no news today to drive it up. So we may well just, stay within the range of yesterday and consolidate, just waiting for the news. So when the news comes out tomorrow, if it is a little bit US dollar weak, then we may get up to here or the next level up. And then you can look, for the weakness to occur after the news release to position yourself to get short. So it is just a question of, does the news give you, does the market give you that opportunity to sell from a higher level? I hate having to be in a position where the price is right now thinking, okay, well, should I sell now? Because if I don't and then price drops tomorrow, I'm going to miss out. That's the fear of missing out. So I try not to have the fear of missing out. I just look for logical levels where I'd really like to trade at if it can get there, and I'll just be patient. So we'll just have to wait and see. All right, we covered the pound crosses. That pound yen is trying to break below the next level of weekly support. So the higher level may well be off the radar, but it could still come back into focus tomorrow when the BOJ does its announcement. 15-minute chart we've already covered, but it's not going to take much for this to get up to 1900, and we're only maximum of 20 pips away from that level. So that is most definitely a level to start to watch today. You can most definitely look for that level today for failure, execute to get shorts. Let's see if we can get there, but we're only 20 pips away. All right, New Zealand yen. Now, just challenging day support here. And I just want to take my daily lines off, because what I'd like to do, this has been very consolidatory. And then when you just sit on the day chart here, you can think, okay, well, what's really happening? But if you look at the monthly chart here and you look at the major overall picture, all right, it can take a long time for the overall bigger picture to eventuate. A lot of last year, we were kept topping out at the top here. We formed, when we get to the weekly chart, quite a range of consolidation, and the topping out process was up here at the 79% fib retracement level of this larger range. So we could be seeing a topping out process here at the moment for a move down this way. There's always in the back of my mind at the moment with, potentially what the US is doing, raising its interest rates greater and higher, and recessions, but a number of economies go into recession and stock markets start to falter and maybe significantly sell off, and we have a risk off event. In risk off events, yen pairs will decline significantly. Now, of course, at the moment, we've got the dollar yen moving up, but in risk off events, pairs like the Aussie yen and the New Zealand yen will trade down. And we may be getting a long-term shift here from a risk event perspective. So we could be topping out here for a long-term move down. To the weekly chart here, this is that whole area kind of consolidation. Folks broke that weekly top over there, 87.33. We have lots of support down here, but this false break here sold straight down. Then we've been consolidating, maybe that's the drop. This is the rally to short of the 62 for this move down here at the moment. All right. All right, so at the moment, and I Been shouting out for weeks to watch this area of weekly resistance for failure. And of course, we can see here it is it's obviously failed, never came back for a second retest. So you had to trade up here. And I did go through how to trade the range yesterday. So at the moment, the range is, there's your top, even though we traded a little bit but above it. And here's your bottom of the range. It's a weekly range. So drawing a fib, we'll go from that weekly top to bottom. So I've got my 100% level there. Is selling here with your stop at the 127R up here. That's the trades that I taught you yesterday. You have to be able to, go, okay, I've got nerves of steel. I'm going to sell here, stop above here, targeting now to the base of support. All right. Getting in right now, how do we get in? It's difficult when we're at the low of the move. Like I was showing in the Aussie yen, that's the last swing lower top on the 4 hour. You just keep dragging your fib down until you get a rally. All right, look to sell a rally within the fib tool. All right, that's what I would be looking for. So can that come around? You just have to monitor. Might not offer you the opportunity. Depends what the market wants to do, but always look to sell a rally if you can. 4 hour continuation pattern to the downside there. Look to sell New Zealand dollar. All right, so to the weekly chart. All right, double top. We don't need that on there. Now, as I was saying, on the pound dollar is definitely doing it, and this pair did it last week, where we tried to move below weekly support here, but then needed a bounce up before committing below. So that's what we're getting on the pound dollar at the moment. Whether or not the same thing is going to occur on the Aussie dollar. But yes, it definitely happened on the New Zealand dollar. So there's your double top. Double top price projection is down at 58.68 at the moment. So down here is we did move below weekly support, had to come back up to daily resistance up here. And this is a little bit overextended. It is trying to hold below this daily broken level of support here, but the natural course of things is price moves down and then has a rally and then moves down. So it would not be a stretch to expect this to move up to that level and then, move down. That's how structure works. What we could hold at this structure that we're underneath at the moment and just continue the sell-off. All right. So to the 4 hour chart, there's definitely an imbalance there that we've created. Can the market feel it or not? If it feels it, it can obviously get up to the higher level. All right, so when I analyzed the New Zealand dollar today in a Telegram, and I did say, if we don't hold here, we could most definitely get up to the next level up there. And I was looking, if this is all we can do is hold here, we did just hold there yesterday, and we've held there today, and we've held there once more. This might be the time to sell right now against that resistance level for a move below 61. And what I put out in the Telegram today was I was looking for a clear break of 61. So looking for a clear break below 61 and that to be a resistance, but it's not coming around yet. All we could do, can we do this over the next couple of trading days? Move below 61, because 61 is being supported at the moment. So that's what I'm looking for, is if we're holding here, I'm looking for strength to the downside, that 61 gets nicely broken, becomes resistance. That may well happen over the next week of trading at the moment. I don't like trading here because I just feel we may want to move up to the higher level. All right. If this lower level proves itself and can't break, then we will break 61 and 61 will become resistance intraday. All right, that's my thought process. All right. Slide is saying it's showing high bottoms, what, on the 15-minute chart? I mean, that is a higher bottom and that's a higher top, but that's a rejection. So, you know, but don't forget when we came up to there yesterday, you had a higher bottom. So the change is going to, the market trend will ultimately change there, but you don't see the change until down here. So you have to decide, do you want to get in here in anticipation that the price is going to change with limited risk? You know, you could have sold there with a 20 pip risk, and then you're asking yourself, can we move down and break below 61? And like you're saying, a squeeze, we could get a bit of a short squeeze. There could be a number of people that kind of sold around here for a move below support. And, you know, if we do start to drift above this level, they'll start to panic and we'll get a bit of a short squeeze and we could end up to the higher level up here. So, you know, if you're wanting to trade both sides of the market, if we move above here, you could look for that level to be support for that rally to move up to here. All right, if you're prepared to trade both sides of the market. Clearly the dominant trend is down. I'm just looking at the pound on my other screen. Doesn't look like it can get up to that level at the moment. Now, so depending on what your thought process is when you're looking at the pound heading back, we're in the red pivots there. And on the 50-minute chart right now, it does not look like we're going to get up to that high level at the moment. It looks like it's, you know, there's been a push up there, but it doesn't now look like it can get there at the moment, you know. All right, back to New Zealand. So, and what's that euro dollar doing? Is that euro dollar tested that high? So the euro dollars, you know, can't quite get up to the high either up there. All right. So New Zealand dollar, you just have to, you know, do you want to trade here in anticipation of a move down and that we don't move higher? It's always difficult. When you know the better levels up here and you see price holding here, and then you get the fear of missing out. All right, so if the market's very weak, it may well just hold here. All right, it's all psychological. Is this the level that's going to hold? It's the level that's holding right now. So do you trade there to move down, or you simply decide that I want to trade at the higher level if we get there, or not at all? My rule here would be I would wait for the higher level or not at all at the moment. I would like to see clear break of 61. 61 becomes resistance for a move down. Because up here, where you're trading it, maybe trading up here at 61.91 or slightly higher, you got the 62 level. 62 level would, you know, that area up there would be ideal for a revisit to trade down from. It's just whether it can revisit. All right, current candle is starting to get positive, but you can monitor, make your own decision. All right, dollar Canadian. Now we could be moving much, much higher. Dollar Canadian, the Canadian side have kind of put a pause on their interest rate rises. I don't know. I don't really follow the Canadian fundamental picture too much. I do know, obviously, that they didn't raise interest rates this week. So they've obviously put a pause, you know, are that their terminal rates? And Lift Me say, I think the rule should be to follow the market rather than predicting. Well, you can follow at your own decision making, but if you follow price action for a long time, you know, if this starts to move down here, sure, you can follow that, but when you see a significant drop here, imbalance, most often than not, these imbalances get filled. So I would rather trade the probability, and yes, I'm making a prediction that I think price could get up there, and I can be wrong, and it's not going to cost me any money if I'm wrong. But I just know from a probability perspective, looking at price action over many years, the more probable thing is that we may well come up to this higher level. So do I want to short here? All right. But I can be, almost certainly be wrong. All right, now dollar CAD, we've been in this long-term consolidation here. As I was saying about interest rates, maybe on the Canadian side, at the terminal number, they paused. But of course, on the US side, they're not on the terminal number at the moment. So potentially breaking out consolidation here, we could see a much higher move. The next key level on the horizon is 139.77. So breaking above that level, we don't know what the US news will bring. But this is a little bit overextended. And if I was to draw in, what days that's 1, 2, 3, 4. We draw a fib in from this higher swing bottom up to the high, you just keep dragging it up. I can see that the 62% level overlaps nicely with this area of broken resistance, which could be support and a pullback. So that would be a nice level to watch on a pullback. The market, though, may not allow it to pull back to. That's been a significant break now of weekly resistance. 137.05 is, you want to look to buy a dip in that very strong trend. So two levels to watch would be 137.05. Does price pull back to that level? Do you see setup? Does price pull back to that level? Okay, it's a clear uptrend at the moment. I don't think you want to be fighting that. When we get up to, if we get up to 139.77, then there's obviously the question, then can we break above a major top there? And we could hold there and reverse back down. But at the moment, that's in a clear uptrend. And, trying to sell against that at the moment would be a fool's paradise. So when you break it down to the 4-hour chart here, you may only get a pullback on the 4-hour chart. You could be looking for a pullback on the 4-hour chart there. If we do get a break of a 4-hour higher bottom, then we're looking at the weekly support level here at 137.05. Just want to have a look at the 15-minute chart. If it'll pull in. All right, it doesn't seem to want to pull in, so we'll just stay there on the 4-hour chart. My interconnect connection doesn't want to pull it in. Let me just refresh on this chart. And then refresh on this chart. All right. And Slav is saying there's a mark on your screen in the upper right corner. All right, I don't know what mark you're talking about. All right, this is the 4-hour range here. Now I'm just going to get rid of that fib. What I'm definitely seeing here, if you're prepared to keep buying at such high levels, this price doesn't want to get to the central pivot point today. Yesterday couldn't get anywhere near the central pivot point, so this is in a very strong trend. So when we're not pulling back to the central pivot point, we're in a strong trend. This is an uptrend. All right, so nowhere near the central pivot point yesterday. If we can pull back today intraday, we may only get to the central pivot point. We may have already done that, and this 15-minute chart trend here has turned back to up. So this actually could be the low of the day now. So if you are prepared to be a buyer so high up, then, you could be buying stop just below the intraday low here at the moment for a further move up for the day. All right, so whatever your setup is, you wouldn't be getting it at the best price at the moment because your trend line break occurred on the last candle, so you may be giving away a little bit of profit potential there, but there's a definite breaking up to the upside there on the 15. Can't get to the central pivot point. This could well now, if I look at where today's projected high is, this could be searching for the high, today's projected high today. That's very much in a strong uptrend. All right, so dollar CAD, in a perfect world, for me at the moment, it's just a little bit high up, but this can just keep going up one strong day to the next as that US interest rate differential certainly rises on the US side and is no longer rising on the Canadian side as they put a pause on. But pulling back to support would be the most logical level, trade to look for, and the safer trade to look for. Being a buyer, 4 days up now. This move is now one day, one very large day, 2, 3. This is the 4th day up. So, just getting in now on the 4th day of the move isn't very logical in my mind. Looking for the pullback and getting set for the next move would be the most logical thing to do. And we will go to the dollar yen. So we're having a bit of a sell-off, maybe just because of the Bank of Japan coming out tomorrow. But this is holding its uptrend. And what I am noticing here is now that we've broken above 135.16, which is a monthly top from back in time, 2002, you can go to your monthly chart and find it, or I can just quickly show you this top over here. We've clearly broken back above that top now, which is this line here at 135.16. What I'm seeing here is the range is getting a bit tight, but what you're often, you can see once we break above a level, sometimes what happens, let me just draw it, we get a strong break. So the strong break is here above that resistance. Then we pull back to fractionally above resistance becoming support. And then what you can get is you get a very kind of tight price action. Where the ranges are rather small and kind of equal, or before it then goes again. So what I'm seeing here is that this uptrend is kind of creeping at the moment. It's just staying kind of quite uniform ranges to the upside and the downside. So if I was just to show you on the 4-hour chart, that was the very impulsive move. That was the pullback. Now, if I copy that line, this is slightly longer, but it's not massive. All right, that's the next move up. If I copy that move down, all right, we're kind of in the proximity of a similar move down. All right, so as well, if I draw a fib, this is the range of the week. I know in pure swings you'd be drawing your fib from there to there, and we're kind of at 62% of that range. But this is the range for the week, just there. So we're almost at the 79% level. And if you look left here on the 4-hour chart, you've got your broken resistance here to be support. So this could be actually at the buy level at the moment, 136.17.4. All right, it's the 15-minute chart. I'm going to need to take these lines off. So I hope you get that idea of, got some similar ranges there, potentially. Tighter ranges. All right, so there's a 50-minute chart. So now at the moment, you could be looking for a reversal down here. This is quite a tight trend line. Is that 136.17, the 4-hour support level? And you look left, we've really just come back to fill an imbalance. This impulsive move here. That's what's left of the imbalance when we pull back there. We've just completed all that imbalance there over here. All right. So you could monitor this area now. This could be where we're going to get support to move back up for the day. All right, one more to go through. Let's just go through gold before we finish up. So here we are on gold. Massive sell-off on that Wednesday morning. Monthly chart for me here is very negative. This looks like a lower top here for a move down. Economists are saying this is going to $3,000, but I don't see it myself at the moment. And we could have maybe just had a bounce here on weekly support, and we could be getting ready to put in a lower top here on the weekly chart. You know, if we finish down this week, expect maybe we're moving below 1807 next week. That's if we don't close below 1807. This looks like a bounce and a failure now with the fundamental shift, and we could be moving lower. All right. Now, from the day chart perspective here, that's a higher top, and we could form a higher bottom here, you know, to move up. If you're just purely trading the day chart trend as your bias long term, you're looking for a buy at the 7% retracement here for a move up. All right. But there's the big question of that massive failure this week up there. Are we going to continue the move down? So you could drop that down to the 4-hour charts. If you start to see bullish price action starting to form there, you do have a higher bottom on the 4-hour chart. So maybe we're getting support here to move back up the range. All right. It would be a lot clearer if the weekly trend was in line with the monthly trend quite clearly, then we're just looking to the downside. But here is a bit of a mix. The weekly trend is still up. The daily trend theoretically here is still up. So weekly and day trends don't align with the monthly. So you have to work out yourself, what is your rules of trend? What are you using all the time as a systematic approach to determine where you're going to trade? If it is a day chart trend, that day chart trend is up and the weekly chart trend is up. So this could be moved up, hard pullback, can't hit support, holding at the 79% level. 4-hour chart is starting to form a higher bottom there. So what do we think, folks? Do we think we're going back up, or we're just pausing before we're going to break below 1807? That's the question. Still have my thoughts on the GP225. All right, quickly. All right, just waiting for the data. Oh, I don't really like it. It's very range bound. So you think it's failing at the top of the range? Well, I don't. I think the bottom of the range is here. I think the top of the range is probably there. I can see that we maybe got, see, that's a lower top, that's a higher bottom. So, you know, it's range bound where I can see a 79% level where it could hold to put in a lower top. but with it being so range bound, I would maybe look, like you said, I'll just put the 79% in there, just looking at your comments. You know, there's that 79% level there, but it is range bound, so I'd be more concerned that it's going to come up to the high level. So, you know, I'd be, you know, you could monitor and you're waiting to see what happens. I don't have all the data here at the moment, I think. Don't know why price action is above my 100% level. All right, my data is just catching up. All right, so we're at the top of the range there. Now I see what you're saying. My data was delaying. So then we have this other range. All right, so now I see 79% level, top of the range. This could be a head. This could be an elongated left shoulder, an elongated right shoulder. So now it makes sense to what you're saying in the chat. Yeah, so that most definitely now is at the top of the range, 79% fib, most definitely. So, you know, that line being the top of the range, you know, to think about maybe getting short, you want to see the market close below that level for sure. We don't quite have a close below that level at the moment. But if you get a close below there, or you want to be aggressive like you were on the French stock market, you know, you are selling potentially there at the tops of the range. So, and the S&P moving down. I mean, the market may well be waiting, you know, the Japanese market could be waiting for the BOJ to do its thing tomorrow as well. Because if they say something that may impact interest rates, even fractionally, that's going to be negative for the stock market. So, you know, I can see what you're seeing there. Are we at the top of the range to move back down? You know, so you just have to ask yourself, what's your trigger to get in? 4-hour chart at the moment still up, but if your 4-hour chart turns down, and then you see a lower top forming, that could be a trigger to get in. And all right, so you've already shorted. All right, what you're seeing is exactly the same as me. It's top of a range. It's just whether the range is going to hold. And you know, you've obviously taken an aggressive stance. But if it holds, it could obviously move down. You know, if the S&P 500 starts to move down and unfolds, this will probably go down the same way. All right, everybody. So, of course, we've got the US job figures coming out tomorrow. It's not easy waiting for an announcement while we don't know whether the price will move up or down from it. And the market's trying to absorb that drop from early Wednesday morning as well. I think at the moment, maybe the most prominent pair would be the pound dollar. It may get up to that 1900 level, 1915 today. It may. It's getting a little bit choppy here on the 15-minute, but it may get there. You can just monitor that level to see whether it will get there. And then you're making your decision as to whether you want to trade, aren't you? All right, everybody. Thanks very much for being with me for the week. Thanks very much for your company. Next week, we've got more analysis coming up on Tuesday. That's the next webinar. Coming up on Tuesday there, the 14th. So if you have the time, I'll catch up with you there. Other than that, good luck tomorrow in the job figures if you're trading. Have a great weekend wherever you are, and look forward to seeing you next time. Thanks, everybody.